And click. I think it is live. So let's just start talking, Carrie.
Okay, we can start talking. Welcome to Wednesday. Woo!
It is Wednesday, Workshop Wednesday for today is, August 19th, 2020. So we are going to talk about an actual topic today. Hang on a second. Hold on. I got to mute myself. Ooh, that was horrible.
Kind of good for my end, so.
Okay, well, so what we're going to be talking about today is, so the workshop today is going to be handling upfront customer deposits and retainers, because sometimes that is a little bit of a challenge to handle, and the way that QuickBooks then handles that when business owners or sometimes even accountants and bookkeepers handle it through the normal workflow of I've received a payment because I got to deposit that, then it gets a little challenging sometimes with how reports look, and QuickBooks Online definitely on a cash basis will cause some confusion for sure. So there is a proper way, and I'm using air quotes there, to handle that on the accounting side of things. And so that's what we wanted to kind of talk about. So Carrie's going to walk us through and talk about the desktop side. I'm going to speak to the QuickBooks Online side, and hopefully you're joining us on the Facebook in the Abo group. If you have comments, concerns, questions, just throw them in the comments there, and maybe we can address them as well. So Carrie, you have like a business case or business use case for that, specifically for your own business. How does that work?
So often we, like for support jobs, many of you might have noticed that if you don't get paid up front, you may not get paid. So it's really best practice to have them prepay for your appointment, whether it be an hour, 5 hours, a retainer of 10 to 20 hours, whatever it is. The day that you get paid, the problem is it's not income. And the customer may just use an hour or two of the retainer, or they may use the whole thing. Regardless, it's a problem because it's not income the day you get paid. So let's just say you have a subcontractor, just to give you a use case. Let's say I subcontract Dan and somebody hires him for an hour and they go
Why do you want to do that?
I don't know, but sometimes we like Dan. And so we hire, the customer goes ahead and pays us, but Dan hasn't done the work yet. So it's not income to my company CBG. It's not even income to Dan. It's basically in a holding bin. So how do we account for it? We want it to sit in a hold. We're not going to just keep it in a drawer because it's in my bank. It's a deposit, right? So I'm going to show you the method that we use. So are you ready for me to go there yet?
Yeah.
Okay.
Go ahead.
Hang on.
Let's work.
Let's work. Okay.
Let's work on this workshop.
Let's work in this workshop. All right. So I've got my, I got to get rid of a couple of these screens. I've got my QuickBooks open. Okay.
So in accounting terms, when this situation, when you received an upfront deposit, you said it's not income, but what is it? What is it classified as?
Well, that's a really good question. So let me just show you how I do it. So let's just say I get a deposit of $3,000 because we want a big retainer. It's not common that happens. So the first thing, my first mistake is to code this straight to income. So I'm not going to do that. I'm going to go ahead and code it to an account that I set up. And what did I call this account?
Customer deposits, I think.
Customer deposits. There we go. All right. So you can call this account anything you want, right? What kind of account is it? It's an other current liability because you are getting money ahead, just like you got a loan for a car you purchased, but you haven't actually done the work yet. So create your current liability. You can call it whatever you want, retainer, customer deposit, whatever makes sense to you. Just as long as it's a current liability. So I'm going to use that in my from account. Now for QuickBooks, you see that received from, this is where you could put the customer name, but best practice by Carrie, I leave that blank because I don't want to foul up accounts receivable. I do that separate. So in my memo, I might say this is from, and this is my famous sample account. I call it ABC Plumbing. If I could type. And then I might go as far as to give you the check numbers because sometimes that's helpful, right? Or it's ACHEFT, ABCDEFG. So I'm putting in the amount, $3,000, right? So there it goes. That's one of my many steps.
So that step is to record in QuickBooks the depositing the deposit, for lack of a better word. Taking the money that you've received up front and putting it in the bank. That's
right. So let's see, did it land anywhere here? Let's scroll down.
It should have.
Yeah, it should have. The date, sometimes the date gets me messed up.
Yeah, the sample company.
Here we go. All right, see, it landed on my balance sheet. That's correct. And it's a temporary thing, which is okay for cash basis, accrual basis, what have you. But this could sit here for a long time, especially think about construction accounting. You can use the same method. You're going to be paying some security deposits, so forth, and working them down. So right now, this is okay for it to sit here until you do something. One of the things that I like to do next is to go ahead and move it into my accounts receivable now. Right. So that this is back to zero. That's my method. So the next thing, and when you're working with invoices and credit memos, guess what? You have to work with item codes. So I have set up an item code, and I actually you can call it whatever you want. I'll show you how I set mine up. I called it prepayment. You can call it retainer. You can call it anything you want. But it is mapped to that same current liability account that I set up in the beginning. It's called service, and all I've done is I've set it up to go straight to this account. Okay.
Got it.
All right.
So you do this as soon as you deposit it. So as soon as you take the money to the bank, you'll do this next step.
Yes. And this way, it also leaves me the ability, in case I have to run financial statements at the end of the year, I can put it back so that it's showing a customer deposit. But for me, for invoicing throughout the year, when I'm not worried about a financial statement, I want it moved over to AR so we can apply it. Because once they start whittling that down, you want to be able to tell the customer what they have left, right?
Okay.
So my next step, and I do all this in the same day, so it's all dated the same. I go into my customers and I'm going to create a credit memo, which is the opposite of an invoice.
Right.
Yeah. Okay. So now I select the company. Before it was just in my notes, and I'm going to use that. Of course, I call it prepayment. It's mapped to my customer deposit, and I'm putting that full amount in there of $3,000. And I've set it up so it's non-taxable and all that stuff. So it doesn't really matter what's down here. It still does it properly. So I'm going to hit save and close. And so then my next check, I'm going to retain it as an available credit. And now if you go back to, now we no longer see that account is gone. Refresh. The customer deposit account is zeroed out. But my accounts receivable, so when you go to open, my other favorite, I love this open invoice, you can see credit memo. This is the one I just did. The other was my playing with it for the blog. But anyway, so this is it right here. So you've got the $3,000 sitting there waiting to be used.
Okay.
So now what's next, Dan?
So now time passes, and now they're gonna buy something or actually use part of that retainer. And this could be, in this example, it's a support thing, but this could be for legal, the legal industry, construction. Okay, so now you actually are going to do something, and the reason that it's referred to as a liability is because the business still owes something to the customer. Right.
Yeah,
so
if the customer says, never mind, I don't want to hire Dan. He wasn't my friend. He was not nice. No, if the customer says, if the customer says, never mind, and you have to cancel this out, you do owe that money back if services weren't rendered. So it's good accounting to track it along the journey and not just quickly throw it as a credit to receivables. This can also be used too if I had a furniture company that would, if you wanted to order a sofa and it was expensive, you had to make a down payment before they extended the money to order it. So this would be another method for me to put the $3,000 in while I'm having my extravagant sofa made. This might only be half of it, who knows? But it's going to sit there till the invoice is prepared. Whatever that invoice is, we're going to be able to now apply that credit memo.
Gotcha. So now you make the sales transaction. So this would be an invoice at this point, right?
So we're going to create the invoice, and I'm just going to make this a future date. We'll just go to next year, and let's just say that they did, half of it. They did 10 hours with Dan. I mean, however I normally invoice, that's not what we care about. But right here is now we're going to offset that credit balance. So I'm going to save it. I'm just going to save it so we can stay in the screen. And then I want to apply that credit memo that we just created, right? Because I'm going to take the second one. Nope. This one here, this $3,000 one. And then that means they still have a $1,500 credit balance. Ignore my other sample.
Right. So that just now applies that credit memo that you have still outstanding. Your open invoice report is immediately reflected of what their balance actually is, so that they can continue to utilize that process and that credit throughout the process. So nice part about desktop is you have that button to apply the credit. You can choose the right one that you want to use, and then it will then automatically apply that credit. So I like that way of handling it with a credit memo, because those credits can then be used at that moment, whether you're on a cash or accrual. It really doesn't matter, because now you're applying it at the moment that the invoice or the credit memo is dated. So if you do it on the same date, then that will be impacted and reflective that day.
And for this one, what's nice is I did the invoice for January of the next year, which means the income's going to show in the proper period when Dan finally got around to doing that job. It's going to show his income for CBG. I know, he got busy during the holidays and never got to the job. But it really isn't income to CBG Rockcastle Construction until the job is done. So then that shows the right income date.
Right.
So
now there's other ways to handle this too. You could leave it in the liability account, leave it sit there, and then you can create reports based off of that account. And then, very similar to what you have in the open invoice report, but only for that customer deposits.
Right.
So that way you can see what the balance is of services that I still owe. So if somebody calls and ABC Plumbing calls and says, hey, how much do I have left? You can either use this open invoice report, because it will list the credit memo that is still there, or you could utilize the customer deposit report, even totaled by customer, so that you can see, well, they still have that much to use.
Because if you didn't use the credit memo method, you could actually create a invoice and then zero it out with the credit deposit with that.
Yeah, and it really just depends on what you need as a business owner, or what your customers need to see. Because one thing that's missing in this thing is that the customer never sees what's being applied. So if you're going to send this invoice to the customer, you might want to itemize that out, which you could use the same item.
How about the statements?
Yep, you could use a statement to create a statement, so you'd see the credit memo and the invoice listed out there for ABC Plumbing.
Yeah.
Or you can do it on the transaction as well. So there's lots of ways to actually handle this process. So it really just depends on what it is that you need to see. So you can see there on the statement how each of the credit memos and invoices are applied, and what their open balance and total balance actually still is.
So it basically depends on which method you want to. You can use the same theory, but just the key is to take that deposit and put it into the bucket, into your balance sheet properly, and then account for it. But if you have massive amounts of these coming in and coming out, you just really need to pick the one that works best for you for the workflow.
Right. So that's kind of handling it in desktop.
Okay.
So let me go ahead and start sharing.
All right. I gave up my controls. It's very hard for me sometimes.
All right. So I'm just working in the sample company. So I do it very similar to what you said, and the same. Either option is available, and I'm not 100% sure, but if you can do in desktop to automatically apply credits.
Yeah. And
so there's a preference for that, so that you didn't have to necessarily do that step of when you're creating the invoice, the credit would automatically apply to it. That's great if you have only one credit, but if you have multiple credits, you might want to specifically go and you want to don't want to give up that control.
Yeah.
And manually map it, right?
Well, like you saw with my sample, I was already playing with one in there for my blog, and I didn't want to pick the wrong one. So it was a good thing I had it turned off. But that is a nice feature to use, that preference.
So same thing here in the chart of accounts, creating a customer deposits, other current liability account, and then doing the same thing with the products and services, creating a customer deposit product and service mapped to that customer deposits account. So same thing there. So when you receive it, now another way to do it, instead of going directly into the deposit, is actually creating a sales receipt, because that will actually create a transaction for the customer. So if we use Amy's Bird Sanctuary, not ABC Plumbing.
Starts with an A.
Right, does start with an A. So there's our deposit, and say it's another $1,000, whatever it is that they're doing, the upfront deposit, and then save it. And then that's going to start the process of actually making that deposit, because maybe you group that with other deposits. So you might want it to go to undeposited funds, which is another workshop that we did a couple weeks ago, cleaning up undeposited funds. So you can check that out too. But that's one way to handle the receipt of the deposit. And then when you actually go to utilize it, so I've created a memorized report based on where'd it go? Custom report. There we go. So the customer deposit balance. So there it shows those sales receipts. This was the first one, so we just get rid of that one, not to confuse people with additional balances.
In there. Sorry, people.
So what I did was I just filtered it for, customized the report and filtered it for that customer deposits account. So that way I'll see the money being deposited into that liability account. And then when I go to use it, so now there's an invoice. They're going to purchase. What do we have here? We have some gardening. And let's say it's only $500. And then what we're going to do here is then use the customer deposit as a negative to apply it.
And you can do the same method in desktop too. I'm glad you're showing this one.
Yeah. So then, so now we have a $0 invoice. Forgot Amy's Bird. Forgot the customer.
Not ABC Plumbing. Okay.
And now we have a $0 invoice, but we're taking the service. This is doing the income, and let's just throw that out next month so that we have it at a different date. And then it's applying the upfront deposit to it here on the invoice. So then back on our report, where to
So
go.
put the date, move the date to
Oh, I got to move the
September.
date. Good catch. I'm like,
What happens when we throw things in the future?
right, right. On the report.
So
Yeah,
this
so you
gives the
can,
audit trail for the customer,
right.
which I would
So you
hope
can,
you could email this to the customer.
right. So
Okay.
then you can set this report to all dates and save that as a customization. So that way you're not confused by the,
Yeah, all dates is good.
like I was there. On it was Amy's bird in the headlight. But there it gives you the balance. And then as you have other customers that do this process, they would be separated out by customer. And then, QuickBooks allows you to collapse so that you're not seeing all the detail.
The
And
customer
then you
may
can,
want that detail.
right. But the invoice will have the detail of how that, what services was
Ah,
rendered and the customer deposit that was used right there on the transaction itself. So that's a couple ways to actually handle doing upfront deposits. The challenge there is that in QuickBooks Online, when you're on a cash basis, what happens, actually, let me go ahead and share again. What happens in QuickBooks Online on a cash basis, because what people typically will do is, I'll just receive payment.
right. And they could do this
and
in desktop too. So this
right.
is good to
I'll
troubleshoot.
do this and I'll put it in on such and such a day, and that records the deposit of, the receiving of the upfront deposit, but it puts it simply in cash.
Expense.
It puts it in accounts receivable
Oh,
as an available or unapplied payment. So let's just do this as another. I just want to do
so
a really high amount just so that we know what it is. And I did that, of course, for the wrong date. So let's just leave it at
okay.
9/16. So now when I run a profit and loss for
Yes.
that date, so let's see, next month. So let's throw this out here for September.
Where is it landing on the P&L?
So we have this unapplied cash payment income.
Okay, we don't want it there. We're calling
Right,
it
because
income the day it hits. That's what we're trying to avoid.
Right, because what happens on a cash basis is QuickBooks needs to recognize that as income because it's a cash. I mean, it's a that it is a payment, but it's unapplied, which is true. But in a cash
It will
basis, it needs to
shortly.
hit. It wants to hit the profit and loss, and that's what we want to avoid, because especially if this is happening over
Short
closed
amount of time.
periods.
Yeah.
If you have a closed period of this happened last year, I received a deposit, but they're not doing the work until this year, then on a cash basis you're paying taxes based off of that revenue that you technically don't even owe. You don't even
Right.
have that yet. So this workflow, this process will help alleviate that issue, because it will keep it completely off of the profit and loss altogether.
Right. And similar to the other side of things, like if you're running paychecks and you're withholding liabilities, you don't want to expense things that haven't happened yet. You want to, it's just a short time, especially for cash basis, it's a short time to float it and put it in the right period without making you wonder, what was that $3,000? And then you go back to Dan, you didn't do that job. No, I did in January. So put it in, do this workflow so that you show the income in the right month. Whether your cash basis or accrual, it wreaks havoc.
Yeah.
And then you lose track of what you owe the customer. It's real easy to forget it.
Mm-hmm.
And that's not good customer service.
So in the comments on the Facebook Live, I put in both of our blog articles, one about handling these upfront retainers and deposits, and also a blog we wrote about the unapplied cash payment accounts in QuickBooks Online. Both of these kind of go hand in hand with with this type of situation. So definitely utilize those if you need them, and have any comments, just go ahead and add those to the Facebook group, and we will see you next week. Next week we're going to be doing, I forgot what we were doing. Do you remember, Carrie?
What are we doing? I know it's a good one.
Yeah. we'll be continuing this sort of thing. Let me just pull it up real quick.
Sort of weird workflows that we've had to come up with shortcuts to manage, because the most important thing is to have the best customer service. Barter.
Right, we're going to be handling barter.
Bartering is where you're going to be going into the customer center and the vendor center, and QuickBooks hates that. So we're going to tell you how to fix that.
Right. So we will see you next week for another Workshop Wednesday. Thanks for joining us today and watching, and have a great day.
And have a great week. We'll see you next week.